welcome. Today we're covering reverse mortgages for home buyers, how top professionals are quietly using reverse mortgages to help clients purchase real estate. Welcome to the webinar. Our leader for today is Mr. Jeff Jabora. He will be leading the discussion and the webinar today, so we'll give the floor to Jeff.
Good morning, everyone. My name is Jeff Jabora, and I'm the Director of Growth and Development for Allison James Estates and Homes. If this is your first time attending one of our webinars, please allow me to give you a quick overview of what to expect today. Each month, we host an educational webinar to help agents stay up to date with current trends, close more transactions, and ultimately make more money in less time so they can enjoy the freedom and quality of life that a successful real estate practice can provide. Each of our sessions will last about an hour, and we do open up the line for live question and answers at the end with our presenter. If you are not currently an agent with Allison James Estates and Homes, I would like to extend a special welcome to you and thank you for joining us. Please don't hesitate to contact me if you are interested in learning more about our brokerage and how we can pay you 100% of your hard-earned commission. Before I introduce our speaker for today, I'd like to take a quick minute to share the Allison James story for those of you who have not heard it before. Allison James was founded by Jim Crumbaugh. Currently our CEO is Matt Crumbaugh. Matt has a very successful background in the construction industry, which was a great transition to the real estate industry, and he's led us to the future. Jessica Crumbaugh, who is the wife of Matt Crumbaugh, is the Vice President of Allison James Estates and Homes. She's a top producing realtor and also a very valuable member of our corporate staff. Our success continues to grow every day. Every month our brokerage gets stronger. Recently our CEO, Matt Crumbaugh, was voted the top 100 most powerful people in the entire residential real estate industry. Our brokerage has made the top 20% in several different categories with Real Trends. Right here, number 99 for closed transactions. A lot of other great accomplishments we've made in the recent past. So if you are further interested in learning about our model and how we can pay you 100% of your hard-earned commission, please do not hesitate to reach out to me. We have plans that cater to agents of all levels of production. And my contact information will be on the next slide as well, in one of the future slides. We do have over 750 realtors and growing. We are nationwide and continuing to grow. Once again, here's my contact information. Please don't hesitate to reach out to me. I'd be delighted to speak with you. Without further hesitation, I'd like to introduce our speaker to you and our presenter for this morning's webinar, Kathy Trollinger, a senior loan officer with Movement Mortgage. Good morning, Kathy.
Good morning, and good morning, everyone. Thank you for having me here today. I wanted to also extend out Frank Thomas, who's our San Diego market leader, also extends a hello to everyone, wishes everyone well. And I'll be doing the presentation today on reverse mortgages. This is my contact information, which you'll also see. Today we're going to be talking about reverse mortgages and how top professionals are quietly using reverse mortgages to help clients purchase real estate. And this is really good as a real estate agent because it can actually open up a different avenue for you out there as an agent to help the senior citizen community purchase homes, and by using a reverse mortgage it really helps them out as well, not having a forward mortgage. So we're going to go ahead and move forward, and I apologize if I talk too fast. Sometimes I do, so I'll slow down. So the reverse mortgage program was implemented by the Reagan administration. It was actually, the purchase program was available since 2009. And this program has a history of success, but also gives you the ability to preserve your savings. So that, saying that, it lets the people that have had, a property that's been paid off free and clear, that's working on a limited income, to do a reverse mortgage purchase, reverse mortgage refinance. And for those that want to downsize, it helps them get into a smaller home with the sale of their larger home and not have to use all the proceeds from that home to try and get a mortgage using a fixed income. It actually allows them to purchase a house and not have a mortgage payment, which is a really good aspect of this loan. The benefits of a reverse mortgage. It's available for first purchases and refinance. Again, purchases when you have a senior citizen couple or that want to downsize and sell their big house. They've raised their kids and they want to buy something a little bit smaller. Refinances are for those who have had the home, they're free and clear, they're working or living off a limited income, and they could use some extra cash, and this will afford them the ability to do so. It is available to borrowers who are 62 and older. It is available in fixed rates, also variable rates. There's no monthly principal and interest payment owed. They do not have to make a payment on this loan. It is still a mortgage, but they don't have to make a payment on it. There's no maturity date. So this loan will go on as long as they occupy the house and as long as they're still living. Finance 100% of the closing costs. Everything can be financed into these loans. So there's really little to no out-of-pocket cost for this at all, for this program. Okay, the next topic, forget about the myths and get the facts. There's a lot of myths to this, a lot of stories that have come out over the past years, you know, discounting the reverse mortgage. It really is a good program. The first myth, I no longer own my home. The reality to that is, yes, you do retain ownership in your name and you remain on title to the mortgage. It is still a mortgage. It's simply just a mortgage in reverse as opposed to doing a forward mortgage, which most of us are more aware of. But yes, you do retain the ownership and the name still remains you on title. This is still their home. Myth number 2, the lender takes the house. That is not correct. Reality after that is you cannot lose your home as long as you pay your taxes, as long as you pay your insurance, and you maintain your home. So as long as you live in your home and it's your primary occupancy, you make your property taxes on the property and you make your insurance payments that are due for your property insurance, you will not lose your home. The bank will not take your home. Myth number 3, reverse mortgages are expensive. Closing costs are strictly regulated and are similar to forward mortgages. They typically include origination fee, appraisal, and recording fees. So what you normally see with a forward mortgage, you're also going to see with a reverse mortgage. They're not very expensive, although there is cost in there, but they're not very expensive to do. Myth number 4, my home must be debt-free to qualify for a reverse mortgage. The reality or the question to that or the answer to that is even seniors with outstanding mortgages or other debt on their home may qualify for a reverse mortgage. Qualification for a reverse mortgage is very simple. It goes on the equity of your house and your age. Everything else, FICO score, income, it's not really relevant, although income in this past months became more relevant because we have to make sure as a lender that the person that's seeking the reverse mortgage has enough to pay for their taxes and their insurance that come due on the property. So, but other than that, reverse mortgage is a very, very simple loan program, and it's very, very useful. Myth number 5, there'll be nothing left for my heirs. Reality, reverse mortgages were designed so that in most cases, there will be equity left in the home and available to the heirs. Reverse mortgages do not take 100% of the value. This is a HECM loan. This is a government loan. The government will only allow a reverse mortgage to take up to so much. There is still equity in the home, equity that will pass to the heirs. Myth number 6, it only applies if I'm experiencing financial hardship. That is incorrect. Many retirees of the U.S. reverse mortgage as part of the strategic financial plan. They capture the idle equity of their home for a better use. Okay, so basically like I said, when you're living on a fixed income and your biggest asset is your home and your home is free and clear, you need that extra cash to pay your bills, to maybe take a vacation, or to do really whatever you would like to do. A reverse mortgage gives you the opportunity to do that. And that's a really good thing. And it kind of eases the strain of financial hardship if you are suffering, but you do not have to be in financial hardship to get a reverse mortgage. It's not that. It's not that. It's to ease. It's to give you that extra funds if you so choose to use it. Myth number 7, my equity is safe. Equity is subject to decline and is not liquid. Equity is not cash. So basically what that is when you're in a house, it's not liquid cash. So what a reverse mortgage does, and what a big myth out there is that if I get a reverse mortgage and then my heirs try to sell the house after I pass and the house isn't worth that, the reverse mortgage will only, they'll allow you to sell the house if you so choose to do that route for what the house is worth. There's no short sales in reverse mortgage. And again, equity is subject to decline and is not liquid. Equity is not cash. That is correct. So, what is a reverse mortgage? It's a special type of loan that enables individuals age 62 or older to convert some of their home's equity into tax-free cash. That is correct. That is the age, qualifying age of a reverse mortgage is 62. Again, if you own your home free and clear and you need some extra cash, you can pull it out of your home with a reverse mortgage. Unlike traditional equity loans, no repayment is required until the home is no longer the principal residence as long as other program requirements are met. So basically what this is saying is that you don't make a payment on a reverse mortgage. It is not required. You can, but you don't have to. You will not get a payment statement each month like you would on a forward mortgage. As long as the subject property remains the principal residence, you don't make a payment on the home. And other program requirements are met, like you make your taxes on time, you make your insurance payments on time. How much cash can someone receive? The amount of cash, or the amount that can be borrowed, is based on a HUD formula that factors into the age of the youngest homeowner, the interest rate, and appraised value. So basically what that is saying is that if you have a person that's 65 years old and they want to do a reverse mortgage, they would get less out as opposed to someone that's 75 or 80 years old. They would get more, be able to take more out of their house. It's all based on the HUD formula on the youngest homeowner. So if you have a husband that's 70 and you have a wife that's 65, they're going to base the amount that can be borrowed on the wife's age. Again, what are some of the benefits? Okay, customer retains ownership and lives in his or her home. Cash advances can be used for any purpose. And what I mean by that is they can take the cash advance if they want to give it to their heirs to help them buy a house. They can. They can take it in various forms. They don't have to take it, or they can just not take it at all as long as it's available to them. Loan proceeds are not considered income. Let's see. Heirs can keep their home. What are the tax-free cash options? Okay, this is how they can take it. They can take it out in lump sum, advance made, cash immediately and available. So if they do a reverse mortgage, they can take it all out. Like I said, if they wanted to give a gift to their children or to their grandchildren or whomever to help them purchase a house, they can do that with a reverse mortgage and the cash available in their equity if they so choose. They can have a 10-year plan to provide a fixed monthly cash advances. They can take it out monthly, as you would pay a mortgage in a forward mortgage. Basically, a reverse mortgage would basically make the payment to you. So they can have it on a monthly cash advance if they want. They can also do a line of credit and make it available upon request. So that's when you have a reverse mortgage. You don't really need the money, but you know it's there for you. You can draw it out at any time you so choose. What costs are involved with a reverse mortgage? Normal closing costs can be financed into the loan. This may include origination fee, title insurance, appraisal, a mortgage insurance premium, and attorney fees. Property maintenance, plus taxes and insurance. We do expect that the customer or the borrower to continue regular maintenance on the property, paying the real estate taxes, and has an insurance premium. So they have to keep up on that. How is the loan repaid? A reverse mortgage is due and payable when the property is no longer considered the customer's principal residence. Okay, so what that basically means is when they pass, when the last surviving spouse passes, if they're both on the reverse mortgage, which they should be, or if they have to go and vacate the house because they have to go into a hospice care or they're no longer living in the house, that's when it will become due and payable. The loan must be repaid in one payment, either from the sale of the home or through the other resources. When I first read that, I went, are you kidding me? But no, that's not true. What happens when the person passes or the reverse mortgage comes due? The heirs to the house will have a certain amount of time to either sell the house or to refinance out of the reverse mortgage and into their name. If they choose to sell the house or do one or the other, they're going to have 6 months. 6 months from the time they vacate the house to the time they need to refinance. Now, if for some reason they can't sell the house in 6 months, or you as the agents can't sell the house for them in 6 months, or they can't, they don't want to do a refinance right away, they're still trying to figure out, okay, who's going to get the house, blah, 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 then at that point they do have 2 extensions that they can seek on a reverse mortgage. The extensions, I believe, are 90-day extensions, so essentially draws it out for 12 months. So they would have up to 12 months to refinance the house or to sell the house. But it is due in one payment. They can't make payments back to the reverse mortgage. You have to pay it back in full at one time. Who is eligible? Again, homeowners that are at least 62 years in age to occupy the property as their principal residence. That's the key factor. 62 years of age or older, and they have to occupy the property as their principal residence. Eligible properties include single-family homes, condominiums, townhomes, and 2 to 4 unit dwellings. Those are all eligible for reverse mortgages. Non-borrowing spouses are not allowed on a reverse mortgage purchase. That is correct. When both parties are of age 62 or older, we expect both the spouses to be on the reverse mortgage. You cannot have a non-borrowing spouse on a reverse mortgage. What sources are acceptable for the cash to close? The sale of a departing home, the sale of a departing home, the sale of a home buyer's other assets, the home buyer savings, or gift money. So if you have a sale of a departing home, most of the time people that are downsizing into smaller homes, they have a lot of profit coming to them. So instead of taking all that profit and trying to buy a smaller home free and clear, so they don't have a mortgage on it, what they simply have to do is, again, it's based on their age, they have to put a certain amount down. If you're more on the age of 62, in that range, if you're in the early 60s, then you're going to be putting somewhere along the lines of maybe 30%. If you're older, then you'll put somewhere on the lines of 20%. It's all based on age. Once you put that down, that allows them to put only part of the profit down on a new house, do a reverse mortgage, not have a mortgage payment, and be able to take that other part of the profit and put that into other investments as well. So it's better for the borrowers at this point. They can actually diversify their funds instead of sinking it all back into another home. The sale of a home buyer's other assets, okay, they can also do that. If they have investment properties or whatever, they can use that for a reverse mortgage. Home buyer savings, of course, if they have liquid savings, and gift money. So if the children want to give the parents gift money to purchase a house, they can use that as a reverse mortgage and use the gift money for the down payment and closing costs. What sources cannot be used? Sellers, financing, and concessions. You cannot use those. Cash withdrawn from credit cards, of course. A bridge loan of any kind. Subordinate financing. Those are not allowed. What property types are eligible? Single family, HUD-approved condos, PUDs, planned unit developments, 2 to 4 unit properties. If they purchase a 2 to 4 unit property, then they have to occupy one of the units as their primary residence. What property types are not eligible? Co-ops, second homes, boarding houses, and bed and breakfast establishments. What requirements must the new home meet? It has to be the buyer's primary residence. They have to occupy the home within 60 days of the closing date. As with any loan, they have to occupy it in a certain amount of time. Prior to loan application, construction must be complete, the property habitable, and a certificate of occupancy or equivalent issued. So if they're building a house as their forever home, it has to be done before they can apply for the reverse mortgage. Which home is the reverse mortgage for? A reverse mortgage is placed on a new home. If the cash required to close comes from the sale of a departing home, that sale is a transaction separate from the HECM for purchase transaction. So basically, we have to make sure that the home they're selling closes before there closes on a reverse mortgage. At movement mortgage, we can pretty much do it almost concurrently, you know, within very small amount of time apart. So it's really good. And questions? I'll give this back over to Travers.
Yes, I'm here. Okay, we'll begin our question and answer session. And how we do this is using the control panel over on your right. You can minimize or maximize, and you'll actually be typing in the questions that you have for Kathy. So you'll type in your question. I will get them, and we'll read them to her live here today, and we'll answer questions until there is no remaining time. Some of you may want to ask questions by raising your hand and allowing us to activate your microphone. That's not a very popular feature, but it is there. If you'd like to use it, we'll certainly interact with you live here on the air today. So one moment while I queue up questions. And there will be an extended amount of silence as I'm queuing up the first question. One moment. Okay, this question comes from Mariana Pettis. What if the homeowner lives in a single family with a duplex in the rear and they are collecting rent? Is that allowable?
Hi, Mariana. Yes, that is allowable. That's considered a 2 to 4 unit property, and if they're collecting rent, that's perfectly fine.
Next question is from James Murtha. Your percentage down is too low at 62. Will it be 50% now?
It could be. It could be. I haven't seen the updated HUD formulas for. I do know that the younger you are, the more percentage down that you'll have to make on a reverse mortgage. I've never seen it at 50%. The highest I've seen it is at 35, and that's for a young woman who was of the young age of 66, and she only had to put down about 35%.
Okay. And forgive me if this has been answered, but there are two follow-ups about rents. How does that work with rents, and are collecting rents allowed?
Collecting rents are allowed as long as the property that the borrower occupies is their primary residence. As long as it's their primary residence, if it's a 2 to 4 unit property, they are allowed to collect rents on the other units as long as they occupy one of the units.
Okay, Dottie Greco. If a homeowner is having hardship and has defaulted for 2 months, could they qualify for a reverse mortgage?
Yes, they can qualify for a reverse mortgage. They take that into consideration. When usually you do a reverse mortgage, there is no lapse time on hardships, making late payments, foreclosures. As long as the foreclosures or short sales they sustained was not on a government-issued loan, then they're eligible for the reverse mortgage, and as long as it's cleared. So if they were having hardships on their reverse mortgage and they were making a couple late payments, again, the qualifying for the reverse mortgage is the age and the equity of the house that's in the house. So,
Ken Bradley asks, can the proceeds of the reverse mortgage be used to purchase a second home?
yes, you can. As long as the mortgage, the reverse mortgage is placed on the primary residence and it is their primary residence, they can use the proceeds to purchase a secondary home. As long as, like I said, that the subject property that the reverse mortgage is held on is their primary.
Okay. Donna Stewart asked, what about a reverse mortgage down payment? I'm assuming she wants further elaboration from the earlier question.
Well, basically on a reverse mortgage down payment, again, it's a HUD formula that we have to follow. And like I said, if the older the borrower is, the less they're going to have to put down. But the younger the borrower is, the more they're going to have to put down. Again, it's all going to be based on if they're doing a reverse mortgage purchase and how much, you know, is allowed, because we're only allowed to do so much because it's a government-backed program, the government is not going to do 100% of the reverse mortgage. They are going to have to put some down, whether it be 20% or whether it be 30, 35%. I haven't seen them much above 35, but then again, you know, guidelines could have changed. I apologize, where they might have to put a little bit more down. But it's also based on the age and, you know, the age of the borrower and how much they would need to put down. Again, it could be 20%. It could be 30, 40, possibly 35 to 40%.
Sam Longwell asks, how long does a surviving spouse have to obtain a loan?
Well, first of all, if you have a surviving spouse and they're not on a reverse, if they're not included on the reverse mortgage, unfortunately, I've seen borrowers that have done reverse mortgages with other companies where that's happened. It's not allowed to happen anymore. They both have to be on the mortgage. But if you do have a surviving spouse that is not on a reverse mortgage, they do have a year. So they have a year to refinance out of the reverse mortgage, or they have a plus, you know, pretty much up to a year. It's 6 months plus two extensions, which kind of gives them a year. They can refinance or sell the house. If they are of age and there is equity still left in the house, they might want to consider doing reverse mortgage on their own. That's also something they can look at if they qualify for it.
Okay. Stacy Newman, she asked, in trying to, quote, sell this idea to a potential client to go find a home to reverse purchase, there is always the thought of what's in it for the mortgage company. How and why would they do this for me?
Well, the mortgage company, the reverse mortgages are paid like every forward mortgage is. It's just a mortgage in reverse. This was established for the community that the biggest asset that they have is their house. A lot of times they're living on, you know, fixed incomes, and they didn't have that extra cash to do ordinary stuff like buy medication if they needed it, or sometimes buy food. So enable them to tap into their equity of their house without having to pay a mortgage was a big factor. So when you have people that are empty nesters as well, and this is another factor of it, and they want to sell their big house and they want to buy down into a smaller home, if you will, or, you know, live someplace they've always wanted to live, you know, they hesitate about having another mortgage. You know, their first thought would be, I just paid off this mortgage. It took me 30 years. Now I'm going to go back into another 30-year mortgage and have to put out part of my pension, part of my Social Security to pay this other mortgage. This alleviates that. This gives them the ability to live in the house and not have to make a mortgage payment. Now, if they want to make a mortgage payment, they certainly can make a mortgage payment. They're not going to get a statement, but they can make a mortgage payment if they want. They can pay this off if they so choose, but they don't have to. Hello? Are you there? So, I'm sorry, my ear set just went wacky. But yeah, I mean, the benefit to the mortgage company, it's more of a benefit to the borrowers. I mean, this was established for the community that, you know, that gives them a little extra cash. It lets them know that, you know, you have that cash available if you so choose to use it. And the rates are not, they're not rates that are, you know, out of this world. They're not, their rates are very similar to the forward mortgage rates. And it's a really, really good program. And it's a good program for people to really understand. There's been a lot of myths out there about, you know, oh, they'll take my house or they'll do this or do that, but that's not true. Remember, this is a government-backed program. This is not a Fannie or this is a government like an FHA. Actually, they look at this as sort of not like FHA, but it's on the same lines of that. So mortgage companies don't have an extra benefit by doing these. They're just, it's part of their loan portfolio.
Question from Daniel. Is this correct? Only free and clear homes can qualify for the reverse mortgage?
No, that is not correct, Daniel. If you have a mortgage on an existing home, and if there is enough equity available in that home, but you still have a mortgage on it, you can do a reverse mortgage. And the first thing they're going to do when they look at that is they're going to take that existing mortgage and they're basically going to refinance into a reverse mortgage. That allows you to free up this borrower from making a mortgage payment. Now, if there's extra cash available, like say for instance you have a home that's worth $200,000, the person owes $50,000, and he's still making mortgage payments on it, and he doesn't really want to make mortgage payments, you can do a reverse mortgage, take away a reverse mortgage refinance, take away that mortgage so he doesn't have to make a payment on it anymore, you know, for the time being. And then if he has any extra equity in the house, he can most certainly go after that equity and use that extra cash of his choosing. He can do whatever he wants with it. And, you know, basically, to answer your question, if you have an existing mortgage, your house does not have to be free and clear. You can do a reverse mortgage refinance.
Excellent. Next is from Kimberly. How can the heirs keep the home?
Well, there's several things the heirs can do to keep the home. They can, well, first and foremost, they can refinance out of the reverse mortgage into a forward mortgage again. Or if they have the funds available, they can pay off the reverse mortgage. What's going to be due on the mortgage when it does come due is, let's say you have a grandmother that does a reverse mortgage on a house. And the reverse mortgage, you know, she did it at the age of 80. And, you know, she lived a good 10 years, so now the mortgage is due. It's been 10 years. She's going to owe whatever she took out plus 10 years of accrued interest. So that's what's going to be owed back. And that's what will need to be refinanced or paid in full by the heirs, or if you so choose, sell the property and then it gets paid back. But that's usually how the heirs can keep the house if they want to keep the house. It will have to be paid.
Here's a question from Michael Garcia. It's actually a hard question, so I'll prepare you in advance.
Oh, thank you.
Yeah.
Thank you, Michael.
I saw an article recently that said lenders are not working with their heirs when the senior is gone, basically foreclosing and not allowing heirs to take advantage of any money left. Any thoughts on this?
Well, I don't know who those companies are, frankly, Michael, and I apologize if you read an article like that. I did not read that article, and you know, when you're dealing with a reverse mortgage, the bank doesn't come out a day later and say, I'm sorry for your loss, but you owe us this money. You do have time to take care of the affairs. Things take time, as you all know. If your heirs don't have a will or don't have a trust, everything goes into probate. Probate can last up to 3 months and is costly. In that time, you will have that property tied up in there. That's why the lender will give you 6 months and then 2 90-day extensions to take care of the affairs and do what you need to do to take care of the home. The bank's not out to take the property from the heirs. It's just like the bank doesn't want to take foreclosed properties either. We're not in the market to do that. I can honestly tell you, movement mortgage will work with the heirs of the property. That is what we do. We are here to service you. As for other lenders, I'm sorry, I just can't talk for them. I don't know. I didn't read that article, so I apologize. But yes, we do at Movement Mortgage work with heirs. They do have time. Now, if you got to ask yourself too, if the heirs are just sitting around and bickering and bickering and bickering, that clock is ticking. They do need to do something. At some point in time, that 6 months is going to run out. Those extensions are going to run out. So they do need to do something. So, as long as they understand that, like I said, the banks, they're not into taking properties back. So.
Good. Okay. This one is someone asking a scenario. So hopefully you've got your calculator ready, or at least give
okay.
them a way to direct them to you, so you can get a specific answer. But on 150,000, this is from Alan Linford. On a $150,000 purchase price, what is the down payment?
Well, again, it's based on the It's based on the age of the borrower. So if they're of 62, they're going to be putting more down, as opposed to if they're of, upwards of 70 to 80 or above, they'll be putting less down. I apologize. I don't have that formula in front of me, so I cannot give you a precise answer. But if you will if you will send me on my contact, if you'll send me an email message, I will have that answer for you today. And I'll tell you exactly how much they'd be able to, what their down payment would be based on their age.
Okay. And one moment as I'm attempting to sift through, there are some duplicates. Okay, Donna Stewart, her question is around bankruptcy. What about in the time of filing bankruptcy?
If you have a borrower that has filed bankruptcy, basically they have to be discharged of that bankruptcy. There's no wait time. So once they file bankruptcy and they discharge themselves from that bankruptcy, they should be able to do a reverse mortgage as long as the bankruptcy's been discharged.
Craig Murdoch, what if it's a single-family home? Can a room be rented?
Again, that goes back to the answer, as long as it's the borrower's primary residence, the reverse mortgage is good. If they so choose to rent a room, that's fine. Now, they cannot do a reverse mortgage purchase on a boarding house, okay? They cannot use that terminology. But if they have a renter that's renting a room, but they still live there, it's their primary residence. The way that the government will check, just so you guys know, is they will send a letter out every single year, and they'll expect this letter in return. So they get the letter back, they know all is fine, he or she still lives in the house. When they don't get the letter back, that's when they start asking questions to make sure that that person is still alive.
Question from Daniel. Do, quote, underwater homes qualify? I'm assuming he means
Underwater homes?
Right, meaning no equity.
No, unfortunately, that's one of the stipulations of the reverse mortgage is you have to have equity in your house. So if you don't have equity in your house, they won't qualify for a reverse mortgage because there's no equity. There's no equity, basically.
Question from Kim. Is there any exception for the age of 60?
No, no exceptions. It has to be 62 years or older.
Okay, one moment as I scroll down. Dottie Greco, is there a movement mortgage licensed in Virginia?
Yes, there is. Our corporate office is in Virginia. We are actually located in 39 states, and we have over 1,300 employees. So yes, and our corporate office is in Virginia Beach. So yes.
Okay. Greg Alcamina, I guess he's looking for a scenario to help him understand how this would help him in selling. Mm-hmm. So how does a reverse mortgage help him in selling real estate?
Well, okay, if you are a listing agent or selling agent, and you have a client that wants to sell their house, and you know, they're toying with it, and you talk to them and you present them, and they're toying with it, and they say, well, we want to buy something else, and they have those questions, and they're like, well, we don't want to put it all down, but we don't want to have a mortgage, so I think we'll just stay in our house. What you can present them with is the fact that, you know, you are in a big house, you're thinking of selling your house and moving down into a smaller condo or whatever the case may be. You can do this reverse mortgage, and going into this, you're not going to have to make another mortgage payment, so it's still going to be a place where you can reside and not have to make a mortgage payment on the home that you're choosing to buy. You know, and that's a big thing for a lot of the community out there that is that age or older, because they've worked all their life, they have their pensions, they have their retirement, they don't want to use that to make a mortgage payment, and this helps them to alleviate that stress of having to make a mortgage payment, so they can free up their funds to do what they want with their retirement and live their golden years, and, you know, to the best that they can, which is good. But that's definitely a selling point to the senior citizen community that wants to do that. Or if you have someone that wants to do a reverse mortgage and they want to help their children buy a house, you know, like their children, they want to help them with the down payment, but they don't have the liquid assets available. They can do a reverse mortgage refinance on their house, not have to make a payment on it still, and be able to give their money to the children or grandchildren, the down payment that, you know, a gift from them. They can do anything they want with the equity in their house. They can spend it however they want.
Ken Bradley asks, how is the market value determined when the owner either dies or moves to an extended care facility?
Okay, so if the owner no longer occupies the property and is moved,
Let me
yes.
interrupt. I apologize. I missed it. It's actually two-part.
Okay.
Market value and the outstanding balance. He wants to know how is the market value determined and how the outstanding balance is determined when they either die or moves to an extended care facility.
Okay, so when they no longer occupy the property, the market value is basically the same market value, if you will, of all the other houses that are selling. So it's what you as the agent can sell the property for. So, you know, that could be increasing or decreasing. The thing is, when you're dealing with a reverse mortgage, let's say let's take it in this part. When you're dealing with a market value of a property of the person that no longer is occupying the property, and now that reverse mortgage comes due, so you have you as the agent have to sell the property. So basically you would sell it for the market value of the area. Now, either there's still equity in the house, in which case the loan gets paid back, plus all the accrued interest gets paid back, and then whatever's left goes to the profit of the heirs. So that goes all back to the heirs of the property. Now, let's say on the flip side, the property values have dropped, and the reverse mortgage is actually more than what the property value is. At that point, the reverse mortgage sells it for the market value, and everyone still gets paid. There is a loss on the mortgage, but during the reverse mortgage, I mean, there are like certain insurances that the borrower pays into at the time of doing the reverse mortgage that actually, if this happens, that insurance takes effect, and there's really not that much losses out there. You sell it for what the property is worth. There is no short sale in reverse mortgage. As for the outstanding balance, when the person is no longer occupying the house and the lender says, as of this date, they're no longer occupying the house, that's the date. That's the date of when it will come due. So whatever the balance is on the mortgage plus any accrued interest over the years if they had it, that's what is now due.
Donna, actually Sharon Earnhardt, do all banks do reverse mortgages?
No, not all banks do reverse mortgages. Not all lenders do reverse mortgages. I do know that there's other lenders out there that do them, but Movement Mortgage most certainly does reverse mortgages, and we can help you with any needs that you might have in that.
Okay, in one moment, Jose Chavez has a question. I'm attempting to understand it. Okay, Jose Chavez asks, is the interest on the reverse mortgage added to the principal monthly, and then the borrower pays the interest at the end? And I hope I communicated that well. Do you understand the question?
Yeah, basically, when you do a reverse mortgage, you're gonna accrue interest like you would on a normal mortgage. Now, does the borrower have to pay back a full 30 years of interest? No. The borrower only pays back the interest that was accrued during the time he occupied the house. That's it. So if he occupied the house for 5 years, 5 years of interest. If he occupied the house for 10 years, 10 years of interest. If he occupied the house for, you know, there's no maturity date, so if he occupied the house for 29 years, there's 29 years of interest. That does get added onto the balance. It's just basically a mortgage in reverse. So it's accruing the same way a forward mortgage does, but they don't make a payment on it, and it's all paid back after the borrower is no longer occupying the house.
Okay. A question from Kimberly. How much equity does the bank need before they'll do a reverse mortgage?
Well, it is, again, it's based on the HECM, which is the reverse mortgage, is based on having certain equity. I believe the top mortgage payment, I know there's jumbo reverse mortgages as well. They go up into the $500,000–600,000 range, but normally they have to stay under a certain amount. And it is, I want to say 20 to 25%. Please don't quote me on that. But again, if you send me, if I don't know the answer to the question, I will get that answer to you. If you would please just send me a quick email and tell me what that question is again, I will get that answer to you. I'll get you the correct answer, and I'll get that to you today.
And there's a question from Jamie Darling. I'm asking for clarification, but I'll ask the question as stated. A senior is renting, but, and here's the confusion for me, has funds for a down payment. Will this work on a purchase? So if possible, could you answer it both ways, as if she asked if they do not have funds for a down payment?
Well, they do need funds for the they do need certain funds for the down payment. Again, it's based on age. So if they have money for a down payment and they are of the qualifying age of a reverse mortgage, yes, they can use that as a down payment as long as it's enough that, you know, again, it's based on age, it's based on age and equity of the house, but to make the certain down payment. But yes, if they have the funds available, then they can use that for a down payment on a reverse mortgage.
Okay. Dan Whitehead, you said the homeowner could take monthly payments or one lump sum, and that they could use the money for anything. Does that include using the money, the lump sum, for purchasing more property?
Yeah, as long as, like I said, as long as the property that the reverse mortgage it is on is their primary residence. They can use the property, the lump sum, to purchase more property. They can also, going back to the other lady's question too, if that person that's renting, if that person has children that's willing to give them money to put a down payment, that's acceptable as well. You know, you can use gift money to purchase into a reverse mortgage and purchase a house. Now, if you take the lump sum of, again, going back to this gentleman's question, if you have a reverse mortgage and they can take it in a lump sum, they can use that money for whatever they want to use it for. If they want to use it to purchase another property, they can do that, as long as the property that has the reverse mortgage is their primary residence and remains their primary residence.
Okay. There are several more questions. I'm now making the last call for questions, please. We have a couple of more minutes of Kathy's time here, and I want to make sure that we get all the questions answered. We will not be able to answer them all today, but if you send them in, we will get them to Kathy so that we can do our best to get answers for you. So this is the last call for questions, and I'll continue with the question that I have here ready now. Bonnie Glaslow, she wants clarification and perhaps a scenario on using the reverse mortgage to purchase a home.
To purchase a home?
Right.
Well, basically, if you have a borrower or borrowers that are of the age and they want to purchase a house, again, I apologize, I don't exactly know what the HUD formula is for the down payment they would need based on their age, but if they have that amount to put down, it just treats it like a regular purchase. As an agent, you would just look into a regular purchase. There's no difference from doing a forward or reverse mortgage, so there's no extra time in there for lending. There's actually it's actually a pretty good loan program. We get it done fairly quickly because there's really less qualification to it. We just have to make sure that they do make enough income to cover their property taxes and cover their insurance, because that will still be owed. We verify the funds where their down payment will be coming from. We also look at the purchase contract, treat it just like a regular purchase contract, and then go through title, go through escrow. If you are a title and escrow state, if you are not, then you would go through attorneys, just like you would in those states. We go to closing and we close the loan. So loan scenario, again, it depends on their age of the down payment they need to make. And then on the property.
Okay. And last question for the session now, and again, if you have other questions, please type them in now before we end the session. But for the live question, this is the last one. Stacy Newman asks, does the reverse purchase take the same amount of days to close, roughly 30, or does it need more time?
No, it takes the exact same amount of days. Actually, that's a very good question. I thank you for asking that. Movement mortgage, we can actually get a loan done in less than 25 days, which includes reverse mortgages. So where other lenders are giving you 30 days to close, some lenders that do reverse mortgages will take longer. I don't know why, because we're actually a really, really good company, and we do it in 25 days or less. We have a department dedicated only to reverse mortgages. So when you do a reverse mortgage, I'm your key contact person, or your movement mortgage loan officer is your key contact person. You talk to them, you converse with them. You don't go off to a separate department. You don't go off to a different company. You stay within movement mortgage, and we get it done very quickly for you.
Okay, thank you for that. There were several questions about your contact information, Kathy. So in your closing remarks, if you could provide any additional information that may be needed, or what they'll need to do to actually get in contact with you. So closing remarks, please, Kathy.
Well, I want to thank you all for joining the webinar. It was a pleasure for me to talk to you about reverse mortgage. I look forward to do many more webinars with all of you. My contact information, you have my direct cell number. I have that on me at all times, so please feel free to call me at any time. That's also my email address, kathy.trollinger@movementmortgage.com. If you have a question that you need more clarification on, or the ones that I couldn't answer and I promised you I'd get you an answer, please email me those questions right away, and I will have an answer for you right away for them by end of business today or as soon as possible. Again, I thank you all for joining. I appreciate your time, and if you have any questions on reverse mortgages or any other great loan programs that we have here at Movement Mortgage, please feel free to give me a call. Thank you so much.
Thank you, Kathy. And Jeff, we'd like to now offer you a chance to give any closing remarks today.
Yes, once again, everybody, thank you for tuning in today. As a reminder, if you want to go to ajirealestate.com in a few days, we will actually have the recorded version of this webinar up for your review. We will also be sending out both mine and Kathy's contact information to you via email after this webinar, so that if you need to contact either of us, we'd be delighted to hear from you. Once again, thank you for tuning in, and we look forward to seeing you next month. Thank you.